I am Joana Colussi, a research assistant professor in agricultural economics, and I'm here with Michael Langemeier, professor and director of Purdue Center for Commercial Agriculture. Today, we are discussing the July results of the Purdue CME Ag Economy Barometer. Each month, we interview 400 farmers across the U.S. to understand their sentiment about the ag economy. This month's survey was done from July 13 to July 17. Stay with us, and before you get started, please like this video, subscribe to the channel, and turn on notifications so you don't miss future updates. In July, farmer sentiment improved after 3 consecutive months of decline. The Ag Economy Barometer index rose from 113 points in June to 126 points in July. Both sub-indices also increased. The current condition index jumped 20 points to 122, while the future expectations index rose 11 points to 129. Michael, what do you think contributes to the improvement in farmer sentiment in July?
Well, certainly the primary factor was an improvement in corn and soybean prices. And since we've done the survey, they've increased further. And so I think that is really helping sentiment right now.
Is there another factor that you think could?
I think that could be the primary one. There is some discussion of some possible government payments, but that hasn't gotten far enough where they could get excited about it, perhaps. So I think that the increase in prices could be one of the main ones.
Yeah, and also the Farmer Capital Investment Index also ended a 3-month decline, rising to a reading of 50 in July. Although most producers said their financial position had not improved over the past year, they expressed greater optimism about the months ahead. 13% of respondents said that they were better off financially than a year ago, while 23% expected their farmers' financial position to improve over the next 12 months. I think there are kind of some relation with that.
Definitely. When you see some improved price prospects, that's going to improve your sentiment. That's one of the main differences between what they think is going to happen the next 12 months compared to what's happened in the last 12 months. Also, when you look at those two questions historically, there tends to be more optimism looking ahead than looking behind for whatever reason. That's just part of thinking about sentiment. But one of the things I found kind of interesting about the second question, looking at financial performance in the next 12 months, is 23% said it was going to improve. Only 24% said it was going to be worse. And so that there was about even between improvement and not improving. And we have to remember, though, that we do have both crop and livestock producers here. And so livestock producers makes up about a third of the survey. That could be one of the reasons why that was a little higher.
And in another question, looking further ahead, farmers identify crop and livestock prices as the biggest challenge for the next 5 to 10 years, mentioned by 30% of survey responses. Looking at the challenge producers are facing today, high input costs remain their top concern, with 46% saying them as the biggest issue facing their farm operation. Michael, we are once again discussing farmers' two big concerns, that production costs and commodity prices. Is this a conversation that we likely to keep having in the next months?
I think input cost is going to remain the biggest concern for the foreseeable future. And we're actually doing a report looking at the difference between crop and livestock sentiment again this month. And just to give you a little bit of a teaser on what that looks like, both the crop producing group and the livestock group thinks high input costs are the biggest concern. So that's consistent across producers. I was a little surprised that crop and livestock prices was by far and away the most important challenge facing producers, because we got some big ones in there. I mean, we got things like farm transition, financial considerations, weather, along with cost control, but certainly crop and livestock prices were a big concern. And if you read between the tea leaves there, corn in particular is still below break even. And so I can see where that could be a concern down the road. Soybean, they've increased enough that they're getting closer to break even. So soybean's a little different story. Wheat's still below break even. But I think we've got quite a few cattle producers that answered the survey too. And they've got to be thinking that 5 years from now, prices might not be as high as they are today. And so they may be concerned about that here they have relatively high costs. And if those prices come down, they're going to be under a margin squeeze, just like the crop producers today.
Yeah, it's totally understandable. Another factor was farm transition, with 17%
Yeah,
between the
I was a
channels.
little surprised that wasn't higher. We've done some questions related to farm goals, and that typically is an extremely important goal for farms. And so usually when we do that, it's more like 25, 30% think that's the most important farm goal in their farm. And so I was surprised that wasn't slightly higher. That just tells you how worried they are about prices long run.
That's true. And these concerns that we are having talking about also influence in producers' educational interests. This month, we asked farmers about the most important risk management education needs for their operation in the coming year. Not by coincidence, marketing come out on the top, selected by 44% of the respondents. Michael, how do you read these results?
I think it's very consistent, like you said, with the question related to the biggest challenge in the next 5 to 10 years. If prices is the biggest challenge, then marketing is going to be very important in terms of education here in the near future. In the past, we've asked this question in the past, and marketing usually comes out towards the top or on top. But a lot of times, production and finance is also up there relatively high. And so production was actually in fourth place. I think a lot of farmers are very confident about their production skills, and so maybe that's why it was in fourth place. I think it was interesting to see financial was about 16% in second place. And if you go back to the biggest challenge, there was 14, 15% thought that was their biggest challenge. And so I do think there's a group right now that are really worried about their financial situation. That's not the majority, but there is a group that is really worried about that. And so that's a very important educational need. And then this bucket that we've been talking a lot about in the center here, strategic, was actually in third place. So that was exciting to see. And we're doing quite a bit of work in this strategic positioning, strategic risk space.
14% strategic, and then human resource 7%, and legal 4%, almost 5%. And let's move on talking about cash rent. As preparations for cash rent negotiations begin, most crop producers in this month's survey expect rental rates to remain stable at 2027. 19% of respondents anticipate cash rents will increase, compared with 7% who expect a decline. Among those expecting higher rents, most anticipate increase of between 5 and 10%. Michael, does this surprise you in some way?
The percentage that are expecting higher cash rent was a little higher than I anticipated and a little higher than last year. And so what that tells me, even though they're concerned where prices and costs are right now, they're not so concerned that they're thinking that there's a lot of downward pressure on cash rent. And so I think to kind of summarize that, like you said, I think stable cash rents is a word that we're going to hear a lot as these negotiations are being made. But there is some places, there are some pockets at least, where there is some upward pressure on cash rent. And a 5 to 10% change in cash rent's not that small, given where we're at. And so that was also a little surprising. I thought if the people that thought higher, I thought they would pick the lowest, 0 to 5%, but there was a pretty high percent of that group that picked the 5 to 10, and even some that picked over 10.
Yeah, and it's very high, especially if you consider the cost of inputs.
Yes,
that's
very
right. Yeah. And the July survey also explored producer expectations for agriculture exports and international markets. Producers are still optimistic about U.S. agricultural exports. 42% of respondents expect agricultural exports to increase over the next 5 years, compared with 13% who expect exports to decline. Most producers also believe new international markets for U.S. agriculture products are likely to open during this period. However, this optimism has moderated since last July, when 64% expected new market opportunities. Michael, are exports like to come back in the discussion in the couple of months?
Definitely. I hear some discussion by the Trump administration of putting some tariffs on again certain countries. And so this topic is going to be an important topic for months to come. And we'll make sure, as the imposition of tariffs comes to fruition, we'll make sure to ask some questions related to that. I did want to point out on the two questions, increases of exports in the next 5 years and new foreign markets, that both crop and livestock producers were very consistent there. And so both crop producers and livestock producers are pretty optimistic regarding exports in the next 5 years and then also new foreign markets. I mean, it did slip from last July, but still over half think that there's some good possibility we're going to have some new foreign markets. And I agree with them. I think we have a lot of U.S. commodities that are very competitive in the world market, and there's no reason why we shouldn't be able to find some new foreign markets for those products.
And we saw this movement last year when
Yes.
the United States found new markets to kind of offset the
Yes.
Chinese decline.
Yeah.
And in July survey, producers were somewhat less optimistic about farmland values. The short-term farmland value expectation index fell 6 points, while the long-term index declined 14 points to 152. Michael, what do you think is behind this less optimistic outlook on farmland values?
This one here, I really don't have a good explanation for. I just want to point out that there's still a lot more people that are optimistic about short-term and long-term farmland values than are pessimistic. I think that's the key finding here. And the word I would use, just like I did for cash rents, I think what this suggests is stable land prices, maybe some slight uptick, but no large movements either up or down. This is different from what we saw in late 24. And ever since the election in November 24, there's been more optimism regarding land values, and that stayed the same here for the last several months. It goes up and down a little bit, but still the bottom line is there's more people that are optimistic than pessimistic.
Mm-hmm. And the factors that influence that are the same.
Yes, it's usually alternative investments. Sometimes it's inflation, sometimes it's interest rates, and then net farm income.
Mm-hmm.
Interest rates and inflation change from month to month as being the third most important, but of course they're related.
Of course.
Inflation's high, interest rates are going to be high. And we'll probably add a question related to interest rates coming in the next few months to just kind of gauge where producers think interest rates are going to go, because the Fed could go either direction right now. And so it'd be kind of interesting to gauge what they think.
Yeah. And since July 2025, producers have been asked whether they think the U.S. is headed in the right direction or on the wrong track. In July, 54% of respondents said they believe the country is headed in the right direction. That was up a bit from 53% in June and 52% in May, but still well below the 71% average recorded during the last 6 months of 2025. Any final comments on that?
I think that relates to uncertainty. With the 10-point increase in index of future expectations, I thought that perhaps this would jump a little bit more than it did. It went up 1%. But I think part of this is the uncertainty hasn't changed. Even though they might be a little bit more confident about the future, you still have geopolitical conflicts going around the world that hopefully they'll stop soon. And you still have oil prices that are quite volatile and many other factors that are just creating an environment that we're just not sure what's going to go on. And when you're in that environment, you're not quite as confident that we're moving in the right direction.
That's true. And so those are the key takeaways from this month's survey. You can find the full Ag Economy Barometer report on our website, and we have included the link in the description below. Thanks for watching, and be sure to like this video, follow us, and subscribe to the channel so you don't miss future updates and videos from the Purdue Center for Commercial Agriculture. We'll see you next month.